Fear is the lack of journaled case studies. You're fearful that this isn't going to work. It's not going to work for you. It's worked for everybody else. ICT can do it. But I know as soon as I get out there and I try to do it, these assholes are going to change the algorithm. I'm going to waste my time. I'm afraid it's not going to work for me. I have so many profitable students that had that same fear. How do you get over it? By backtesting and journaling case studies of what you are expected to do when you're trading live, what you're trying to see in price action. And that way you see how many times it works. How many times did it fail? How many times did it go into a certain measure of drawdown? How many handles did it go against you before it started moving in your favor? How long did it take from your trade entry using the worst case entry point, not the best, and then when it got to your objective, whatever some liquidity would be or inefficiency it would be trading to? Your target is always going to be the opposing inefficiency. That means a fair value gap below. If you're short, you're looking for an inefficiency to target, or you're looking for a low or relative equal lows. So you're looking for sell side or a buy side imbalance, sell side inefficiency. That's your two targets when you're shorting. That's not complicated. Fear is easily conquered once you go through the process of collecting the resources and case studies where it worked in the past. And what you're doing is you're training your brain to see these examples. By retention, doing it over and over and over again, you're giving yourself pseudo experience. That means that you're seeing something that's already happened, but you're putting annotations to it in a journal, and you're really placing a lot of significance on that as if you were there. And because you're making it meaningful to you, it's like writing a love letter to your future self. This is what you did so well, and I'm proud of you being able to see this as it happened. Sounds silly, sounds weird, right? But that's how you have to treat it. You're going to nurture yourself and encourage yourself and be the biggest cheerleader for yourself and leave no opportunity for anybody to come in and fuck it up. You don't want anybody else's opinion. You don't want my opinion. As much as you think you do, you don't want my opinion. Your subconscious doesn't want to hear from inner circle trader. He doesn't want to hear. She doesn't want to hear. You don't want to hear anything from anyone. This is your fortress of solitude. No one can hurt you here. Your journal is your secret weapon. It's the greatest trading book you're ever going to read, and you're writing it yourself. You can't make it more intimate than that. It's your experiences, your study time, your focus, where you can be honest with yourself and not be embarrassed about, you maybe expected something else that day. And you can say it sweetly in annotations without being negative, because your subconscious is going to retain that. Your subconscious doesn't remember things vaguely. It doesn't do that. It records things that are heightened, whether it be euphoric or fearful, extremely pleasant or painful, inspirational, desperation. There's no middle ground in your subconscious. Everything is reactive by black and white, good and bad. It's just the way it is. So you have to take that into account when you're training your brain. And this is a very integral part to learning how to do this. You have to condition yourself. That's why you can't do it in a very short span of time. Your brain is extremely complex. It's extremely powerful. And if you feed it the wrong things, it will scare the living shit out of you, and you'll never learn how to do this. Stop forcing it. Stop rushing it. It has to be meditative. It has to be something that you do as a daily ritual, even on weekends. You have to feed your mind constructive, positive learning case studies where you see these things happening in the past. You're fearful that it's not going to work for you because you don't know what the fuck you're doing. That's all. That's all it is. I am afraid of heights. I have no shame in saying that. I don't have any control over it. I tried to conquer it. It is what it is. I'm not going up into a fucking perfectly good airplane just to jump out that bitch and say I survived a descent with a parachute on my fucking back that I don't have confidence it may open up and do what it needs to do. That's a level of risk that I'm not willing to take. But that's the equivalent of what you're trying to do without any training. You want to go up to the heights of whatever that airplane. Yeah, don't worry about the training. I didn't come to the training day. I don't really know where the ripcord is for the parachute. But I want to get up there and do what they're doing, because it's going to be fun. You don't know if you're afraid of heights. You don't know if your blood pressure is going to drop and pass out. You don't know if you're going to be conscious to do all those things, to survive the descent. You don't know yourself. I know myself. I'm not going up there. Okay? It's as simple as that. So I conquer my fear by avoiding that situation. The way you conquer your fear about trading is you condition yourself to find the atmosphere, the conditions, the profile in the marketplace. I'm talking about profile in the sense like a schematic, like how the market will behave, whatever that is for you. For some of you, it might be as simple as I want to do a classic ICT buy day where you're waiting for the opening. You want to wait for a Judas swing to drop down, maybe going into take sell side liquidity out on a lower time frame, or trade into a buy side imbalance, sell side efficiency, fair value gap. And then you're buying that with the expectation you're going to hold it for the entire range, and you'll get out in the last hour of trading. And you're going to wait for instances where that can manifest itself in price. It won't be every day, but you're okay with that because you're not out there trying to impress everybody that's day trading as you being an everyday trader, which rolls us into greed. Greed stems from the lack of trust in yourself and or your model. Wait a minute, how can that be? If you're greedy and you're saying that I'm greedy because I have a lack of trust in myself and or my model, how can I be greedy? Because you want a lottery mindset. You think that this stuff works, yes, but it just might be the day that you go in there and try to do it, it might cause you losing money. It may cause you losing peace of mind. It may cause self-doubt, and you may blow the account. And you'll hear people out there that never show you that they make money. They'll tell you, you got to push your edge. When you're making money, you got to push your edge. Keep going in, keep going. No. I teach plateaus. What is more likely for you to succeed? From the bottom of a mountain slope, if it was a completely smooth 45-degree angle up to the peak of it, you're brand new, it's the first time you've been there. What's more likely and sustainable for you to start running at the fastest pace that you have and can do, and start to run from the base of the mountain in a 45-degree slope all the way up to the top? You're at the zenith of it. You're at the very pinnacle at the top. You're at the highest point now. Can you sustain that highest fast pace in that? Chances are no. Think about when people ride the uncertainty roller coaster with going up the Mount Everest. Nobody goes up there in a straight shot. They go up for a little while and they level out for a little while. And they have to allow their body to do what? Get accustomed to that new height. Lower oxygen. It's a whole process. So when you're climbing your equity curve and you're getting in and you're trying to find profitability and consistently profitable, each day in the beginning, you think, I want to make this much money every single day, this percentage every single day. And when I'm winning and the market's still running, don't go back in thinking, I got to get some more out of that. Your model says, be done. You don't trust it. You think if you don't push my edge, get in there and do as much as I possibly can because the market's really running, you're losing sight and you're pushing your entire career into one trading day. That's greed. That's the only reason why that happens. Greed. You think that you're going to make so much more in that one moment in time. You're thinking to yourself, this is the one that puts me over. You're fucking trading with nano lots. You're trading with micro lots. You're trading with one mini. Your life isn't changing. Okay? You're not retiring. You'll still see Carl tomorrow. Don't let this stuff mess with your head thinking that you have to do something over leveraged, over trading, doing more than what's necessary. Your model says take the trade when it gets to your target, be done, be content, close the charts, and then refer back to it at a later time when you wouldn't be trading it. If you can't do that, you don't trust yourself. And if you're thinking that way, you shouldn't trust yourself. You have to physically remove yourself from the markets. Leave. Don't be around. Don't have the app on your phone. Don't do it. Or you don't trust your model. People are greedy because they think that their model is only working right then and there. So let's maximize it because it might not work in the future. I might not be able to find the same setup that repeats every fucking day, every single week. It sounds silly when it's said like that, but that's exactly what you're doing. You're forgetting the fact that this stuff repeats.
Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.